Bitcoin will continue to do well. I don't think they're going to stop printing money, so I don't think Bitcoin's going to stop going up.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. Today, I want to begin with a quick reminder. There is a website associated with this podcast called wealthformula.com. And that is where you go if you want to sign up for some of our other resources, including an opportunity to sign up for our accredited investor club. Now, this is a group that is open to anybody who qualifies as an accredited investor. What is an accredited investor? It means you make $200,000 a year or $300,000 per year. If you are filing jointly, you've done so the last couple of years in a row, and you have a reasonable expectation to continue to do so, or you have a net worth of $1 million outside of personal residence. If that sounds like you, congratulations, you are an accredited investor, and all you need to do is go to wealthformula.com, sign up for the investor club there, and get onboarded. Now, I bring that up because we have lots of interesting stuff coming up. Again, there is this is still a bloodbath in real estate, and opportunities are abounding. So if people want to, again, experience that ride back up, which happens every decade or so, here's your chance, right? So don't stay on the sidelines, at least take a look at what's out there. Join the investor club. Now let's talk about today, what's going on in real estate. Well, we live in truly extraordinary times in general right now, not simply because things are changing, but because of how breathtakingly fast those changings are happening, right? Take artificial intelligence. It's not really some futuristic buzzword from a sci-fi movie. It's already reshaping our lives, economies, and how we relate to one another. But here's what's really mind-blowing. Okay, like if you just take artificial general intelligence, for example, basically this means like a type of intelligence that thinks on its own, that is supposed to be as smart as all of humanity combined. It's coming up supposedly in the next 2 years. Now, this isn't the kind of gradual innovation we're used to. It's a complete overhaul, right? Artificial general intelligence is going to come with a rewriting of the rules of the entire industries practically overnight, delivering changes more profound and rapid than anything we've ever seen in humanity. I'm not exaggerating at all. Forget the Renaissance, the Industrial Revolution. Those were kids' play compared to what is around the corner. Even the dawn of the internet is going to pale in comparison to what we're going to see. This transformation could eclipse them all and do it faster than any of us can imagine. Now, that's just artificial intelligence. We also live in a particularly strange place in finance, which it's kind of snuck up on people, even though we've been talking about it a long time. This sort of Bitcoin revolution. Bitcoin has had its own remarkable story over the last decade and a half. Just over a decade ago, it was an obscure digital experiment, right? Dismissed by mainstream finance as tech nerds' hobby, virtual monopoly money with no real world impact. Sure, go buy yourself a pizza with 20,000 Bitcoin, but you're getting that person selling you that pizza is getting ripped off. Not quite. That is a crazy story, isn't it? This is, fast forward today, Bitcoin is completely transformed. Countries like El Salvador now officially recognize Bitcoin as legal tender. Sovereign wealth funds from Singapore to the Middle East, they're quietly stacking sats, as we say, into their national reserves. You got big corporations out there like MicroStrategy, and they've turned conventional treasury management upside down, choosing Bitcoin as their primary reserve asset. Bitcoin's journey from fringe curiosity to essential financial infrastructure it just shows you how big of a shift we are in finance. It's insane. Now, I'm not saying, I do believe, by the way, that Bitcoin is headed to $1 million probably in the next 5 years. And I say that because if you just look at the pure volume of purchase there versus how much is actually mined, the discordance is enormous, right? And it's just a supply demand issue. Only 21 million Bitcoin will ever be mined. I think, 3 or 4 million are thought to be lost already, right? Anyway, it's not just technology. It's not just finance that we're seeing these seismic shifts in either. It's geopolitics. Economic strategies are also entering what I would call fairly uncharted waters, or waters that have not been charted in a very, very long time. With the Trump administration back in power, we're witnessing a total rewrite of the traditional economic playbook. You got tariffs once that used to be really cautiously applied economic tools. Now they're leverage vehicles, reshaping global alliances and multiple decade-old partnerships, right? We're like allies with Russia, and, make Ronald Reagan kind of roll in his grave. But, it's a new world order. Long-standing allies like Canada and Europe are finding themselves more in transactional relationships, while, surprising new economic partnerships, again, as we described, with countries, especially like you talk about some of the things going on in the Middle East and all that, is purely based on pragmatism, which you can argue good or bad. It's just very, very different, though. Again, all this really unprecedented, but when you have these kinds of change, invariably you have enormous opportunities. So how do you make sure that you end up on the winning side of this historic transformation? Well, I'm going to go back to the same theme as I always do. You gotta actively educate yourself. You gotta stay out of the curve, position yourself to prosper. Yeah, and I'll just brag here a little bit and say that I've always made it a mission to try very hard to anticipate things we're headed, and more importantly, to share the vision with you. Even back in 2017, many of you know, and joined me in embracing Bitcoin for the first time, and it was sitting at like $5,000 back then. And again, I'm convinced it's headed to $1 million in the next 5 years. The conversations that I'm having make it seem kind of inevitable. The data that I'm seeing make it inevitable. But again, this isn't all about Bitcoin. This is what I'm just saying. The theme of what I'm trying to say is that you've got to become part of the conversation. You have to start talking to people, listening to people, looking at the data yourself. And a good place to start doing that is with my interview today with Anthony Pompliano, who's got a big presence on X, which I have been kind of getting more involved with. By the way, if you are on X, look for me, at Buck Joffrey, because it's just fun to have conversations on there as well. So anyway, we will have that podcast interview with Anthony Pompliano, aka Pomp, right after these messages.
Wealth Formula Banking is an ingenious concept powered by whole life insurance. But instead of acting just as a safety net, the strategy supercharges your investments. First, you create a personal financial reservoir that grows at a compounding interest rate, much higher than any bank savings account. As your money accumulates, you borrow from your own bank to invest in other cash-flowing investments. Here's the key. Even though you've borrowed money at a simple interest rate, your insurance company keeps paying you compound interest on that money, even though you've borrowed it. Net result, you make money in two places at the same time. That's why your investments get supercharged. This isn't a new technique. It's a refined strategy used by some of the wealthiest families in history, and it uses century-old, rock-solid insurance companies as its backbone. Turbocharge your investments. Visit wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Anthony Pompliano. He's also known as Pomp. He's an entrepreneur, investor, and leading Bitcoin advocate. He's the founder of Professional Capital Management, where he incubates startups and manages assets, blending innovation and with disciplined investing. He's a former Facebook product manager and U.S. Army veteran. Pomp's insights on macroeconomics, crypto, and wealth building resonate widely through his Pomp podcast and X commentary. Pomp, welcome to the show.
Thanks for having me.
All right, well, let me start with this, Pomp. Let's start with the big picture. And I know you talk a lot about this kind of stuff, but What macroeconomic trends are you watching right now, and how they, with regards to how they're shaping the markets today?
I think there's really three things, right? Over the long run, they're going to debase the currency. That's going to be a persistent tailwind for all liquid assets, including stocks, Bitcoin, gold, and bonds. And then I think that you also are going to have a very interesting dynamic around all these tariffs and kind of the administration's economic policies. And then the third thing is that there is a whole technology trend to pay attention to. Obviously, innovation is very deflationary. We've got things from humanoid robots to rockets to gene editing to crypto and everything in between. And so I think those three things really tell the story of where markets potentially go in the future.
Let's talk a little bit about the Trump administration first 100 days. Tell me your thoughts on the tariffs. There was a lot of concern, I think, initially that the tariffs would be wildly inflationary. Maybe that was a little overhyped. Maybe the tariffs were more of a chess move initially. Tell me what your thoughts are on that.
I think the tariffs are pretty close in terms of a balance, right? You've got on one hand a very tax-driven economy where we take money from Americans and frankly we spend it all over the world, including domestically but also internationally. The idea of tariffs is to then take revenue from outside the United States, kind of the external revenue service, and use it to help here in America. What the big question now is will the tariffs actually be allowed to happen in its current form? Obviously, we've got the courts, or one court saying that that's not possible. I think the administration's got another idea. But the answer is I have no clue, right? Somebody smarter than me, probably the Supreme Court will end up figuring that one out. Simultaneous to that, though, you have kind of this three-pronged strategy that the administration continues to talk about: tariffs, cut taxes, and then deregulate. And so really, to me, I think the most important thing they talk about is shifting from a public sector economy to a private sector economy and getting growth going and innovation and things like that. I frankly don't care who's in office, right? I think that generally empowering entrepreneurs and small business owners to go and create economic activity and grow GDP is a positive thing that really works from an economic standpoint. And the tariffs, I think, were there to kind of supercharge that or balance it out. But it's a balance between putting tariffs on and then kind of being very chaotic and they're on, they're off, then certain number, a lower number, whatever. And so I think that ultimately we'll figure out what the numbers are, right? Are there tariffs? Are there not? What's the percentage? That'll kind of stay stagnant. And then I think that you're really going to, again, just shift back to, okay, how do we get technologists and small business owners cranking to get the economy going? And so, let the politicians and public sector officials figure out the tariff stuff. I think that myself and others, the only thing we really can focus on is how do we get the private sector growing? And that's what I try my best to do.
It is interesting though. Like I saw a video of you on Twitter or X, I guess, was that on the day where I was basically convinced of the same thing. And I think you were talking about, the Trump playbook, that perhaps there was this tariffs were part of this attempt to also create maybe just enough instability in the economy to drop bond yields, because ultimately that would potentially long run stimulate the economy. But it didn't really turn out that way, right? It kind of seemed to backfire a little bit because of, whatever concerns or instability on the macro level that other countries had about us.
Well, I think it worked in that the yields did go down, right, when they got implemented. I think when yields started to kind of U-turn is then when there was a bunch of uncertainty. And so it's like, if you got a clear plan, clearly communicate it and clearly execute it, then you get one desired outcome. If instead you have kind of a direction and some unclear communication, then you get what we've gotten. And so part of this, though, is like most things, you got to get some sort of data or feedback from the market. So you do something, the market reacts, you adjust course, right? I actually think one of the problems that we've had in public sector for a long time is people are like, this is the plan is rigid, we're not changing the plan. All the things in the market are changing, right? And the plan is just the plan, and no one ever picks their head up and says, hey, is the plan still a good plan according to the world today? So there's some balance there between you want the market feedback, you want to iterate towards success, but also the market likes clarity. It likes the ability to understand what you're going to do. And, it's kind of the old adage, tell people what you're going to do, tell them while you're doing it, and then tell them afterwards what you did. Right. And I think that's kind of where this administration is trying to figure out the balance. And look, critics, I think, have some fair critiques. And I think they got a lot of stuff that isn't fair critiques. And, I always kind of go back to this idea of everyone's got an opinion, whether you like people, you don't like people, you like policies, you don't like policies. I don't know very many people who got a better plan. Right.
Yeah.
And so it's always kind of this thing of
we have to do something, right? I mean, at the end of the day, that's the big issue. And I think that there's an attempt to actually do something about trade imbalance, about deficits, things like that, because no one else has really tried that hard to do something. And it may seem extreme, but maybe that's where you need to start. Right.
I completely agree.
Similarly, you look at Doge and it's interesting because I think that Elon did a lot of great things, but at the end of the day, it just doesn't seem like much of that is going to come to fruition now because of congressional activity. What's your take on that?
Well, I just think that Doge had all the right kind of thought process. They set out to go and cut cost, and we sent some of the most accomplished engineers, entrepreneurs, some of the smartest people in our tech sector to go and do that. And I think my conclusion is that they know what to cut, they know what to do.
Right.
They're not going to be able to, right? And
Yep.
that's okay. Like no different than if you go up and you're playing a baseball game. Well, guess what? It would be really easy if you didn't have to leave the plate after 3 strikes, right? If you could sit there and swing all day, then that would mean you'd hit a home run every time, right? Well, there's rules, and those rules prevent you from doing certain things. Same thing here is they want to go in, they want to make cuts. And, I've got a friend who's a Doge engineer I recently interviewed, and he said, listen, we can't fire people.
Yeah.
We can suggest to fire people, but we can't fire people. So if you want to cut cost, it's pretty hard if you can't actually cut cost, right? And I think that that's really where a lot of people kind of went in. It was like, hey, if this is a private business, you just make good decisions. Kind of a meritocracy, right? It's like, hey, just do the things that are good for the business. This isn't a business, it's public government, right? And so I think that that's what people are trying to figure out is what is the path that is needed to be able to actually make some of these changes.
Yeah, and again, that the problem is that they don't have, regardless of how good these ideas were, if they can't get them through, it's not going to help. But, so in terms of the debt, the other possibility or the other prong of this is to potentially grow out of it. And you mentioned artificial intelligence, some of these technologies that are coming through. What is, in your view, like what's the real impact going to be here? Is this going to be able to, get us out of a mess?
Well, I just think that you got to grow GDP, right? And, look, it's a really interesting dynamic. Maybe we don't get out of the mess, right? And so what happens is they're going to monetize the debt. How are they going to do that? They're going to devalue the currency. What's that mean? It's going to be a tailwind for all assets that are liquid traded. Okay, that's probably what's going to happen. Yeah. Right? I want to grow out of it. I want to, get GDP crank into 10%, right? All these things that we want to do, we should still try to do them. But if you're just a betting man, look at the probability. Probability is that we're going to end up monetizing the debt and devaluing the currency. And, quote, the Bitcoin thesis is right. And, that's where we're going to end up.
Yeah. Shifting gears a little bit. We got rising household debt levels, credit card, mortgage delinquencies. How are they influencing retail investor market participation?
I just think that debt can be good or bad, right? There are certain people who are very smart and they use leverage appropriately. Think of that more as like the real estate investor who knows what they're doing. They, are kind of prudent in their use of it. These tax system to their advantage, and that's a great business and it's built a lot of wealth. And something like 80% of millionaires in America got it through real estate. Okay, got it.
Right.
Then there's a lot of people who use credit card debt and quote unquote bad debt, and it puts themselves in more financial pain. And so I think from that perspective, you got to ask yourself, the people who are being kind of thrust further and further into that economic and financial pain, they lose hope. When they lose hope, guess what? They push out on the risk curve. They start to buy assets that maybe they otherwise wouldn't have bought, right? They feel like they got to catch up for lost time. And that usually compounds with bad decision-making. On the other hand, the people who are using good debt, they don't need to worry about catching up, right? They just allow the structural advantage they've created for themselves to transpire over a long period of time. And so you can think of things like, the Berkshire Hathaways of the world, the real estate investor who's got a very diversified portfolio with low levels of debt coverage that understands they're buying good assets at good prices. And so I always come back to the devil's in the details or the nuance, but we should recognize that there's both of those are true. There are certain people and certain cohorts in the economy that are doing better than ever. They don't see a problem. They're like, this is amazing, right? Everything is going great. And there's other people in the economy who are saying, this is horrible. It's the worst it's ever been. I can't catch up. I'm falling further and further behind. I'm frustrated. I don't know what to do. I'm just going to punt, right? I'm just going to take the flyer. on a high risk, kind of opportunity.
Right.
Well, when
Right.
both are true, it makes for really bad public discourse because you have two sides that are yelling at each other, and they both vehemently believe what they're saying because they're both true. And so the hard part is, how do you actually have a conversation when you have two different groups coming from two different perspectives of a topic and find a solution? Well, the short answer is you're not going to be able to find a solution that benefits everybody. And so what you have to ask yourself is, who are we actually trying to benefit? Who are we actually trying to positively impact?
You've mentioned that many Gen Z and millennials are financially dependent on their parents. How do you see this generational dynamic shaping their approach to investing in wealth building?
In terms of what they're doing that's working?
Yeah, I mean, what do you think that they're in a precarious position, right? They're financially dependent on their parents. I guess the question is, how do you see this dynamic ultimately? I mean, are they going to be able to build any wealth? I mean, they're kind of a lost generation.
Yeah, I mean, they definitely can build wealth, right? There's plenty of
Yeah.
people who end up doing quite well. If you look at, the youngest billionaires in the world, the list seems like people are getting younger and younger on that
Yeah.
list, and things like that. But it may be rarer, right? So power law kind of
Right.
takes over. But I also think that timeless investing principles are timeless for a reason. And so doing the things that people know and have known for literally decades will continue to work. And so if you buy assets for less than they're worth, it's probably a good strategy. If you hold great assets for a really long time, it's probably a good strategy. If you benefit yourself by positioning to benefit from the inflation, right, that's probably a pretty good strategy. But also, I think that people today, in general, who are younger, they're optimizing for something other than financial freedom. They're optimizing for experiences. They're optimizing for, social capital on Instagram. They're optimizing for whatever the thing is. And that's no different. When I was younger, there were certain things that people did because they wanted to seem cool. Or they wanted to have a cool experience, or they wanted to, own a physical item where they were a consumer, not an investor. All that stuff is part of human nature. But I do think that what we now have is everything that was true of your or my childhood is on steroids, right? If you want to do certain, kind of bad things, you can do them even better, faster, cheaper, and they're way more kind of plentiful in terms of those opportunities. If you want to be a really good investor, the information to learn how to do that, the ability to do it at a younger age with bigger dollars, all that's available as well. So everything is just magnified now with the internet. And so you get some dispersion of outcomes, right? Some people are drawn to, sex, drugs, and rock and roll, and they go and they do all kinds of crazy stuff, right? And some people are drawn to investing and everything in between. And so I think it's less about like a generational thing as much as it is, you can really trace the outcomes of a lot of these folks by what did they learn and when did they learn it. And some people had the fortune to be taught it by their parents or a family friend or maybe a teacher, a mentor, something like that. A lot of people I know that they just kind of learned it as they were going, right? They
Yeah.
figured it out. They read books. They were on the internet. They tried things. They, iterated, whatever. Neither one's right or wrong. Everyone's got kind of a different path up the mountain. But I do think that we probably give the younger people an excuse by saying, oh, you're young, that's why it's not working. There's plenty of people who are being successful, right? It's just that you got to put yourself in the lane to actually be able to do that.
I'm going to shift gears a little bit. I've been talking about Bitcoin on this show since 2017. And at that time, I think a lot of my audience thought I was out of my mind. And of course, it has become a completely different animal since that time. And you've said basically that it is, quote, taking over finance. So how do you see its role in institutional portfolios evolving over, say, the next 5 to 10 years? I mean, compared to where we're at now.
When I grew up, the S&P 500 was the benchmark. There's a risk-free rate in bonds. I believe that my generation and younger sees Bitcoin as the benchmark. And so it's very simple. If you can't beat it, you got to buy it. And I think that there's institutions around the country who are realizing they can't beat the benchmark, and therefore they will end up buying it. And really, to me, that is maybe the most interesting part of the entire conversation, is that Bitcoin obviously has risen significantly on a percentage basis in appreciation. Bitcoin has kind of infiltrated every corner of finance. But most importantly is it has transitioned from a high risk, kind of asymmetric type asset to now it's becoming the hurdle rate.
Uh-huh.
And if you're the hurdle rate, you suck up a lot of capital. because
Yeah.
there's not a lot of people who can beat you. Right. And I think that is a very powerful position for Bitcoin to be in. And that's how you infiltrate into the institutional portfolios.
Yeah. And speaking of institutional portfolios, so I was watching a little bit of YouTube coverage of the Bitcoin conference in Vegas. And I was pretty amazed. We had Adam back up there. Who's one of the really early guys. He's leads Blockstream, one of the really early guys in Bitcoin. But he was talking about how they'd have many conversations actually with these huge funds. These funds that you would never thought would be touching Bitcoin. But I think what I'm kind of thinking is that these, the pensions and that sort of thing, they're looking for a little bit of alpha, and they're also seeing this as, well, if we don't do this, we could really be missing out. You almost have to be part of it, even if it's like 2% of your portfolio. What's your take on that?
Well, I think that there's different allocations for different, outcomes. If you're looking at it as a pure diversifier, then you're probably going to do a small allocation. You're probably going to rebalance. You're probably going to try to fit Bitcoin into modern portfolio theory. If you are looking for outsized performance, you probably are going to go much more concentrated. You're probably not going to rebalance. You're probably going to, press the winner. You may even buy more as it goes up, right? And then there's everything in between. And so it really comes down to, if you have a non-correlated or a low correlation asset that has asymmetry to it that other assets don't have, what are you trying to accomplish? And that is ultimately going to determine what your allocation is, and then what you do, whether it goes up or down in price once you start owning it. And so you can imagine a world where there are certain institutional investors that are going to buy it and it goes down. They're excited because they're going to buy more. And there's certain institutional investors that are going to buy it. It's going to go down and they're going to be kicking themselves because like, I got to market to market, my next quarterly report. And now it's going to say I'm down 4% on my Bitcoin. And so again, it just kind of comes down to what are you trying to accomplish?
What I was struck by, though, is I think the commentary from him that I look around right now, and compared to, again, 2017, we've got ETFs left and right. We got Fidelity. We got, Pakistan actually just announced a Bitcoin reserve, which, I don't know if that means they're going to actively buy it or they're going to do something similar to what we are in the U.S., which is just not sell it. But it looks like, we're already there in terms of institutional involvement. But Adam was saying that really we're not, because if you take these pensions and all that kind of thing, there's just an enormous market that is still untapped. And so I guess what I'm getting at here is that is necessarily going to affect the price of Bitcoin over the next 5-10 years.
Yeah, look, I think that Bitcoin will continue to do well based on two things. Bitcoin will stop going up when they stop printing money. I don't think they're going to stop printing money, so I don't think Bitcoin's going to stop going up. That's kind of one huge component of this. The second thing is that Bitcoin is very unique in that the higher the price goes, the less risky it is deemed by the largest pools of capital. Mm-hmm. And so usually, if NVIDIA is at a $4 trillion market cap, people are like, oh, it might be overvalued. There's a lot of debate.
Right.
Well, Bitcoin, if it was at a $4 trillion market cap, would be way less risky than when it's at $2 trillion. And so there is a lot of structural advantages, both from the legacy world, but also from the Bitcoin market, that I think will continue to lead to these large institutional capital pools allocating some percentage. And the beauty is right now we have very small adoption in that world. It's only going to get bigger and it's only going to get more normalized. And I think that one of the parts people really underestimate when it comes to Bitcoin is how important time passing is. If you think back, there is not anyone under the age of 16 that has lived their life without Bitcoin existing. I, at 36, have never lived a life without fiat currency. But there are plenty of people alive who remember in the 70s when we went off the gold standard. I don't remember that. Of course, whether we went off it in the 70s, 50s, or 1840s, it doesn't matter to me. It's before I was born.
Yeah, right.
Right? It's all the same thing.
Right.
Bitcoin right now, most people who are listening to this are going to remember a world before Bitcoin. But as we all get older, the younger generation is just going to, it doesn't matter if it was created in 2009, 1999, or 1809, right? It's just like my whole life, Bitcoin's been around and we all use it.
And to your point, I mean, like there's been plenty of studies showing that, these younger groups, whether that's, Gen Z or whatever, they believe more in Bitcoin than they do investing in the markets. And I mean, they are going to make up, the next generation. That's not going to go away. So it's interesting. Watching Michael Saylor do talking about Bitcoin, and one thing that he said that I thought was really striking was that it's probably the best time ever to buy Bitcoin right now, because the U.S. government will, if they seize your assets, they're going to sell your house, they're going to sell your cars, but they're going to keep your Bitcoin. And his point here was, you basically got the stamp of approval of the U.S. government, multiple institutions, and sure, we're sitting at $100,000, and it's a lot more painful to buy now than it was at 10,000 or 5,000, but a lot of it has been completely de-risked.
Yeah, I think. Look, I think that there is risk is assumed in many ways. There used to be a risk that the government was going to shut it down. There used to be a risk that there was I was going to get hacked. There used to be a risk that Bitcoin could go to zero. There used to be a risk that some sort of better Bitcoin was going to get created, right? I mean, you go through all these different risks. Most of those have been so drastically reduced to near zero. Then now people, again, it goes back to part of that risk being reduced means Bitcoin can slide into that hurdle rate or that benchmark position. And if that continues to happen, then I think more and more people will come to the conclusion that this thing I used to think was risky is no longer risky based on whatever my perspective is. And so I, as one example, never thought that the government was going to shut it down. That was never a risk to me. There's other risks that I might have thought about, but not that one. I have some friends who none of the risks I was worried about were they worried about, but they were very worried about the government shutting it down. So it's all about what do you personally perceive as the risk. And as that gets mitigated, you become more sympathetic or interested in the asset.
And it's a good point, because I mean, even I remember thinking about not shutting down, but comparing it to the 1930s when Roosevelt basically made it illegal to own gold, right? So had to sell it to the government, and then you got Fort Knox. So I think that some of the Trump administration is trying to put in place some laws right now that'll make that so that that's never possible, because that's obviously a little concerning if they can do that. But let's shift over here to MSTR, MicroStrategy, and various. Okay, so this is just so people know, MicroStrategy, Michael Saylor's company, essentially is acting as a Bitcoin treasury company, right? What's your take on these kinds of treasury companies? I think in terms of, are they good for Bitcoin? Do you think that they are companies that people should be looking at potentially to invest in, or if they should just be buying Bitcoin?
It again goes back to what are people trying to accomplish, right?
Right.
Bitcoin has a certain compound annual growth rate that it has delivered to people for a long time now. You can model out whether you think it's going to stay at that level, increase, decrease, what is your time horizon? You can look at the volatility of the asset. There's a lot of ways to kind of analyze Bitcoin as a spot asset. MicroStrategy then takes Bitcoin and adds something to it, its own twist. And people will talk about the Bitcoin torque that it can provide. Some people will talk about the increasing Bitcoin per share. Other people will talk about the ability to have something that trades at a premium, right? All these different components. Some people are looking for that. Some people aren't. I always tell folks that with each twist or each addition to the Bitcoin story, there is risk and there is reward. So what we've seen so far is that MicroStrategy has gone up more than Bitcoin, but also that means that if something is able to go up more, it means that it may also go down more in the future, right? We don't know. And so I think that people just have to ask themselves, what am I trying to accomplish? For me personally, I think that I have held Bitcoin as a spot asset for a long time. I'll continue to do that, right? I will already start looking at the Bitcoin treasury companies. I probably will not have the same allocation to those as I do to Bitcoin, but it doesn't mean that I won't have exposure to those companies. And so it's just constantly trying to figure out, how do I construct a portfolio that allows me to accomplish what I want to accomplish? And I think that whether people realize it or not, it is the innovation, the experimentation, the iteration that is occurring in the public markets that is really important for Bitcoin. Larry Fink creating an ETF with BlackRock, incredibly important for Bitcoin over the long run. Michael Saylor, strategy, doing what they're doing, incredibly important for Bitcoin over the long run. I think you'll continue to see many different variations of this that people try. Some will work, some won't. As an investor, your job is to figure out where's there a risk and avoid it, and then where's there a reward and capture it.
Yeah. I'm a little bit concerned about some of the copycats of MSTR, some of the other treasury companies that are coming in. Saylor's done a very good job. He's a very smart guy with his ability to raise capital. But if you start getting some of these coming up, GameStop is starting to get into it as well. For example, I mean, the accumulation of Bitcoin, when you add that with potential bad debt structures, could potentially result in, maybe not the equivalent of a bad altcoin season, effectively. But I could see that being a real potential problem. I don't know if you've thought about that at all.
Possible, right? I think it all comes down to discipline. Anytime that you introduce leverage to an asset, again, it goes back to our debt conversation. Leverage can be used intelligently and to the benefit of the person using it. It also can be absolute poison and can lead to ruin. How do you use it? Single biggest problem is people are using it in an undisciplined fashion that it may hurt you. If you use it in a disciplined fashion and you're sophisticated about it, it can help you.
Actually, I've been thinking about, I know there's some conversations about it on X, guys like Fred Krueger, the potential existential threat of quantum computing to Bitcoin cryptography. Have you thought about this? And if so, what are you thinking?
Quantum computing doesn't exist today. I don't spend any time on it. Maybe one day it will. And if that is the case, then we'll underwrite that risk at the time. While pontificating about a potential technology that doesn't exist today, we don't understand how it will work. We don't understand what its capabilities are. And we don't understand what the potential defenses available at that time. Doesn't seem like a good use of anyone's time or energy. I'm glad that there are companies that are trying to build quantum resistant technologies, right? Getting ahead of it. They're in a race with the people who are trying to build quantum computing as a capability. But those people are all smarter than me. And so for someone who is thinking about the market, commentating on the market and holding spot assets, I'll just wait to see who wins that race, right? Whether it's the quantum computers or it is the quantum defenders, they are all trying to innovate as fast as they possibly can. And the market's going to be the referee.
What parallels do you see between the adoption curves of Bitcoin and AI technologies? I mean, and I guess if you are looking at trying to potentially benefit from investments in this area, how should you think about that?
In terms of benefit from a artificial intelligence and Bitcoin as like a combination or separately?
Yeah, as a combination, because I think there is some synergy there, especially with blockchain in general and AI.
Well, I would argue that Bitcoin is artificial intelligence, right? We basically took a asset, which was human led, and we automated the humans away. It's a central bank that needs no humans anymore. We have a monetary policy that self-executes. Seems pretty artificial. Seems pretty intelligent to me, right? And so if you go and you take a look at what is the true story of Bitcoin and of AI, I actually think those are sub-industries. That to me, what we are watching is a trend of automation. And so smart contracts are automating transactions or automating contracts. Artificial intelligence is automating compute or automating intelligence. Bitcoin is automating money and monetary policy, right? It's all about automation at the end of the day. And what you're trying to use software to drive efficiency and productivity. Bitcoin does that. All these applications of AI and various products does that. I think that you're going to continue to see many, many more over time. And so I think of it less as like I'm investing in quote unquote AI and more as I'm investing in X that happens to use this software in a way that makes it more efficient or more productive. And that's where the AI comes in. And so it's not like, with Bitcoin, I'm investing in Bitcoin means I buy Bitcoin, right? But if I'd say to you, I'm investing in, the U.S. economy, I can buy stocks to benefit from the economy or something like that. That's a very different kind of way of approaching it. And so if you think that AI is going to be some big revolutionary thing, you got to decide how you're going to play it.
Yeah, and part of that is deciding, I guess, which companies are going to use it. I know sometimes people are looking at AI as, okay, well, what does that mean? Should I invest in NVIDIA or whatever? But the reality is that probably a lot of the real value of this is going to be in the companies that use it the best. So the Googles of the world and Meta and Microsoft and so on.
I think that you could also go short the incumbents. You could, do all kinds of different things. You could actually not buy companies that are benefiting from AI in terms of the software. You could go and you could buy real estate that is going to be in data centers that's going to benefit from AI. Right? I mean, there's all these different ways to play
Yeah.
energy, right? Like whatever your preferred
Right.
way of playing it is possible. But it goes back to, again, what risk are you trying to take? There's a lot of people who say, hey, actually, I don't want to take risk on an individual company. I want to be an infrastructure investor. Other people say, well, actually, I don't even want to be an equity investor. I want to provide debt to the energy provider, right? And so all these different ways to play it means that there's going to be winners and losers, and you got to do work. And I think that's really the beauty of capitalism is you get the reward for the work that you do and the decisions that you make.
So I guess looking ahead at the rest of 2025 and beyond, what's the one trend, whether it's, crypto, AI, or markets that you're most excited about, and why? Like, what are you thinking about right now? What do you think about the most?
I think that my generation spent a lot of time over rotating to private markets. I joke that people watch The Social Network and they either want to be Zuck or they want to invest in Zuck. But when you have undisciplined monetary and fiscal policy that will lead to the debasement of the dollar, liquid assets have a structural tailwind to them in a way that private assets don't. And so I am actively trying to shift a lot of what I do to the public markets. I obviously have done that with Bitcoin in terms of a liquid market. I would like to do that with the public stock market as well. And I'm trying to figure out various ways that I can do that, but leverage my competitive advantage to be able to create unique opportunities. I think that's one kind of very big thematic thing I'm focused on. The second thing is I am using the new technologies. So I hold the Bitcoin. We have built an AI-generated automated CFO. So you hook up your bank account, your crypto account, your stocks. You can hook up your cash accounts. You can put your private investment, your house, your car, all that kind of stuff. And then the AI models are overlaid on top of it. It starts to give you insights. You can ask questions. What's my debt to equity ratio? Analyze my stock portfolio. Take a look at the current news and tell me how it's going to impact the various investments in my portfolio. All those types of things. I understand AI way better than I did before we started to build that product. And so I think that's a huge piece of it, is not just thinking about the stuff or talking about it, but using it. And when you start to use the technology, that's when you really, really start to understand it. And it changes the way that you allocate capital in the market.
Tell us about your company a little bit more.
The AI company?
Oh well, I was just, your investment company. I think you have a few different startups there, right?
Yeah, so we've got an investment firm, Professional Capital Management. We incubate companies. We invest capital. I really just think about it as we want to be the equivalent of an intellectual athlete, right? We want to be able to create content. We want to be able to operate businesses, and we want to be able to allocate capital. And when we look at that, what we're looking for is we're looking for very, very unique kind of asymmetric opportunities in the market where we can use our competitive advantage to drive some sort of financial return for us and our shareholders. And, that includes everything from we've incubated 8 or 9 different companies, cash flow positive, growing quite nicely. We've got public market vehicles that we've put out. We've got a $250 million SPAC that is now trading. And then we also have a balance sheet that we invest across the public and private market. We've got everything from crypto, private startups, public stocks. And we just think continuing to allow with what we're doing to compound for a long period of time should put us in a good position.
Is that open to retail investors, Bob?
We have all of the shareholders are accredited investors. They're basically my friends or funds friends run. And then we have all of the investing of them. We do have one small early stage fund that's available for accredited investors. Other than that, everything is off the balance sheet. And so
how do people learn about that? Most of this show is accredited investors, so
they could just DM me on Twitter. Or if they want to email me, it's just my first name, period, last name @gmail.com. But, my focus really is how do we grow the balance sheet and continue to just make good investments. And, if people want to do it alongside us, we're happy to have them.
Fantastic. Thanks so much for joining us, Wealth Formula Podcast, Pomp. And, great show. You're doing a great job, and keep it up.
Absolutely. Thanks for having me.
Take care.
You make a lot of money but are still worried about retirement. Maybe you didn't start earning until your 30s and now you're trying to catch up. And meanwhile, you've got a mortgage and private school to pay for and you feel like you're getting farther and farther behind. Good news. If you need to catch up on retirement, check out a program put out by some of the oldest and most prestigious life insurance companies in the world. It's called Wealth Accelerator. It can help you amplify your returns quickly, protect your money from creditors, and provide financial protection to your family if something happens to you. The concepts here are used by some of the wealthiest families in the world, and there's no reason why they can't be used by you. Check it out for yourself by going to wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back to the show, everyone. Hope you enjoyed it. Again, changing world. Got to listen to a lot of opinions. I don't know that I agree with Pomp on everything, but you got to have different perspectives on things, and hopefully that is giving you one perspective. I do want to advocate, by the way, again, I talked about at the intro here of getting involved, getting an account with X. There's so many good conversations going on in there. You just got to plug yourself in, follow the right people to really get an idea of what's going on. I pretty much don't even, watch the news or anything like that anymore. I use X for all of that. I'm very late to the game. I've not been a Twitter/X person until probably this year. I mean, I've had these sort of accounts, but never really used them. So anyway, if you're on there, get involved in these conversations and follow me as well. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.